The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Aloha from TFNN. Oh, that's not good. Big echo out there. Welcome to the terrific Tuesday edition of the Trader's Edge. I'm your host, Steve Rhodes. Hope everyone's having a great day. I am trying to do the show here live from Maui, Hawaii. Got in late last night, early this morning, East Coast time. And we're going to do the best we can to give you a good hour out here. Give us a call, 877-927-6648. If you cannot call, you can always let your fingers do the walking. You can send me an email, steve@tfnn.com. I'll do my best to get your email requests inside the Tiger's Den. Just go ahead and post those questions out there, and we're going to try to get those to me so that I can take a look at what it is that you want to look at. What a wild day to be gone from the markets yesterday. So not such a wild ride, at least yet today. Although I take that back. It certainly has been wild intraday. Right now we have the Dow trading up 31 points, 24,373. I think before I got in the plane, it was around 26,000 inside of the Dow. So we've definitely had some price erosion, major price erosion out here. You don't need me to tell you that. But when we take a look at some of that price erosion, what it's done is it's really turned its market breadth upside down, meaning that we have bearish crossovers in the TAS market profile system. I'm not going to show them to you on your screen. If I try to run that app, it'll just simply go ahead and degrade even the limited speed that I've got here. But what I can share with you is that right now, and it's only Tuesday, and so the week doesn't end until Friday, but if the markets were to close today, you would have a bearish crossover from a market breadth standpoint for both the S&P 500 and the NASDAQ NDX 100. And that is, on a longer-term basis, that is problematic. It's problematic until it flips, until it changes out there. On a daily basis, each of those are well into the red zone, so to speak. I believe they began crossing last Thursday, is my recollection. At the end of the close on Thursday or Friday, I think it was Thursday, we saw a slight bearish cross, and then Saturday there was some follow-through to the downside. So right now, Dow's up 17, S&P's off 5, NASDAQ 100 up 32, Russell's off 1.5 points. Gold is back $5.40 out there. Some of the requests that are coming in, take a look at. The first request was to take a look at gold priced in euros. I don't think that I can do that out here. It's not that I don't want to. It's that as I post this chart up on my screen, the speed is so slow, it's just simply not populating for us. So I can't do that. What I can do, though, is let's just simply go take a look at gold itself. And as we take a look at the gold contract, right now trading out at 13.31. And oh, that didn't work. Let's see here. And on our screen, this is going to be the gold contract. These green lines are the weekly profiles. Now, these profiles are slightly different than the ones that I had been showing. This shows support. This is the actual April contract. This shows support at 13.19. I believe my synthetic contract, which I can't access on this system right now because I've got no speed here, and it needs speed to do all those calculations. I believe the number was about 1326. Now, 1326 was the top of its box out here. Well, that's the daily chart. Hold on. I take that back. Give me a second here. Let me just take a quick peek because maybe these green lines are actually the daily time frame out here. So let's see here. Multi, give me a second. Let me see. Now, those are the weekly. Let me go ahead and add the dailies on here as well. So, again, the numbers will be slightly different than what you were used to last week, but nonetheless, they're not so significantly different that we can't use them. Otherwise, I wouldn't provide it to you. So here's what we know. We know that the price level inside of gold, priced in dollars, 1333.20 is a key level of support. Now, the reason it's a key level of support is because the center of its box, 1337, much closer to the bottom of the box than it is to the top. Right now we're at 1331, so we're trading slightly below that. When we overlay the weekly market profile, you'll see that it too is a bullish structured box. Again, the center line, that's the green dash line, closer to the bottom versus the top of the box out there. So what that tells you and I is that if gold were to close below the bottom of the box, 1319, what it does is it opens up the door for price to continue to move lower. And that level where you'd be looking for support is 1319.40. Close below that, and then there's trouble in River City. And that trouble in River City would really be coming from the U.S. Sorry about that, folks. Every now and then I got to figure out how to do that on the screen. And that problem would really be coming from the U.S. dollar index. So if we take a look at the U.S. dollar index out here, you'll see it's trading at 89.47. Let's see if we can actually populate this. Let me see if I've got the U.S. dollar index set of charts out here. So give me a moment to try to find these while I stumble through this. We have U.S. dollar index here? Yeah, we do. So here's the issue with regard to the U.S. dollar index out here. And the first issue is the mere fact that yesterday, really it was on Friday, we saw a slight close above Stevie's red line. So close above Stevie's red line. In this case here, we have a rising price oscillator. It's still below zero. So it's not as if it's a bullish breakout, but it does say that there's more counter-trend move, or potentially more counter-trend move. We had some follow-through yesterday. We had price trade into the top of a TAS market profile high, 89.60. Right now, that has acted as resistance. But just because that has acted as resistance does not mean that that's where price will stop. More likely than not, what the U.S. dollar index is doing is heading up into this 90.3 level. That little green dash line on my screen out here could move above that. So gold, considering what we've seen the U.S. dollar index do the past couple of days, is held up pretty well. But, of course, we know that as the U.S. dollar index, we don't know that because there's a basket of 5 currencies, but more likely than not, the move higher inside of the U.S. dollar index is caused by the fact that the euro is pulling back. So right now we've got this fight going on, this war, this battle between euro traders in gold and U.S. dollar traders in gold out here. So watch those profile levels. That's all that we really have to go on. With regard to the GDX now, so let's go take a look at it. Let's take a look at the 3 different time frames. So let's make an attempt to go take a look at the 3 different time frame charts out here for the GDX, in which case we're going to go ahead and give you the daily, the weekly, and the monthly set of profiles out here. As we see the daily, that just looks just basically horrible. Horrible because this closed below the bottom of its daily profile. You can see that was a bullish structured box. That was on February 2nd out here. You close below that, you go down to the next level of support. Well, from a profile standpoint, the next level of support is going to be on the weekly time frame chart. And right now, that is where price is trading into. It's actually just slightly below that. The bottom of its weekly box is 22.33. We're trading at 22.19 right now. What we can look at, although we have to do the mathematics here, is price is trading inside its weekly swing point, the most recent bottom, which was December the 11th, the week of December the 11th. That had 219 million shares. Through the first basically day and a half of trading, we're at 82. You don't have to be a rocket scientist to figure out that that's going to be pretty close from a volume standpoint. So what this says to us on a weekly basis is simply that price can move lower. 21.27. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Thanks for bearing with me through this process here. So what I'm going to do is, well, hey, it only took about 10 minutes for the chart that I just posted inside the Tiger's Den. That's how those charts will also get into the live video feed, since we're just simply having some issues. You're looking at a line chart here, and this line chart shows gold priced in euros. Now, a line chart means we're just taking a look at the closing price, so we're looking at the closing price right now. So if you were going to go buy 1 ounce Krugerrand, a Maple Leaf, short of the premium that you would pay for that coin, you'd be paying 1,075 euros for 1 ounce of gold. What's more important than doing that math is looking at in order for gold, in order for the mining equities to get some juice, we really need to see gold moving higher in both of those currencies out here. And as you can see, it's still pointed down. It's not made a lower low. The lowest, the closing low so far was on February 2nd. And I can't tell you the exact price because I don't have a data window that shows me, but it's around 1073. We're not really that far from it as we speak. Gold will perform best. The mining equities will perform best when gold priced in euros and gold priced in dollars is moving higher. As an example, when gold and the mining equities really took off, that was in December. I think gold priced in, it was December 13th when you saw a turn up, or December 14th. December 13th, in essence, was the low for gold priced in euros. If we take a look at the high for gold priced in euros, that came on January 10th. I bet you we can go back and take a look at the GDX, take a look at its low, take a look at its high, and if it's not the exact same day, it's really right around that period of time. And that's why gold priced in euros is, quite frankly, a really important chart out here. You can also see the gold priced in euros back on January 10th did not take out the highs from November the 8th. Now, it's not the case with regard to gold priced in dollars. So it is the divergences in gold priced in euros that really help to set the stage for what's going to take place with regard to, in my opinion, the mining rallies out there. And you really want to get these both, in essence, turned in the same direction. We go back to the previous rally inside of the mining equities. You go back to July 11, 2017. That, in essence, is where gold priced in euros made its bottom. And mining equities continue to move higher. Move higher until when? right around September 5th, when gold priced in euros went ahead and peaked out. Yes, back then we were looking at gold and the yen because of its directional correlation, and the yen is part of the U.S. dollar index. It's the second biggest component inside the U.S. dollar index. But right now, the key to answering questions about the GDX or NUGT or even gold for that matter, you've really got to get your friends from overseas to start kicking in here. And they haven't kicked in. They haven't turned out. So if you see gold price in euros get below the low from February 2nd out there, you know that what you're also going to see at the same time is the mining equities continue to feel the pressure out there. And that's why you see the GDX trading where it's at today. It's off 45 cents. The nugget is off $1.69. So hopefully that assists you guys and gals out there with regard to where things are trading. You know, some of the questions that came in earlier from a number of folks, subscribers and others were, hey, is now the buying opportunity, right? You've had this nice pullback, this nice correction out here. And the question is this the buying opportunity? Markets are oversold, so you can expect things like what we're looking at today, you know, where you're seeing some of these bouncing. But let's go take a look at what is it that you would need to see, because as we talked about, market breadth is just simply horrid out here. And so let me go ahead and, find some charts out here. Give me a second here to try to pull this back up and post something for you. And that posting for you is going to be some of the shorter-term charts for the ES and the NQ. So let's go take a look at those. Okay, so let me first post try to post a 30-minute time frame chart, because if there is such a thing as a bottom that is forming out here, and here is so if we take a look at the 30-minute chart out here, what we can see is that price is moving lower, doing with less relative energy. When I show you the ES mini, you're going to see just how much pushing of the price lower with less relative energy there was out here. Nonetheless, what it looks like to me is that the NQ is in the process of trying to form its first, perhaps, Gartley sell pattern. Now, the 1-to-1 A equals CD to the upside inside of the NQ is 66.3650. It may make it past that level. And if it makes it past that level, what you should expect or anticipate is to move to 67.1232. Now, the key here, whichever number it is that price decides to hit, you can also see, I'll try this, if you were watching the bottom of the screen out there, and you take a look at that post, one of the things that you know is the bottom portion of that screen is the price oscillator. And the price oscillator has a negative reading of -6 and some change out there. And should price continue to move higher, hit that 66.36 level, what you should see is that price oscillator get to 0. Now, if you take a look at Stevie's red line, it's priced at about 64.78. At the moment in time that you start to see that price oscillator head to 0, get to 0, what we should also then see is a pullback, or we should see a stalling in price and Stevie's red line continue to rise right up into it. In essence, what you're looking for is a test of Stevie's red line. A test and rejection, meaning price bounces off of it, and then the price oscillator moving above 0 would be a short-term bullish event inside of the NQ. Bullish event meaning what? Bullish event meaning that price should continue to move higher. Maybe it gets all the way back up to the highs out here, and the highs I'm referring to take us back to where the market really began to drop off. And this is yesterday. Well, let me see if I can figure out when that is. It's hard to do. It's where, if you're looking at my chart, it's where the red down arrow for the wave count began. So I'm just struggling with some real speed issues out here. And let me try. Oh, wait. I got it. So that was 10:30. Back to the highs of about 10:30 yesterday, 68.13 out here. Now, let's take the bearish side of this. Let's say that the A to B equals CD, even though it didn't complete perfectly at 66.36, we start to see price get below Stevie's red line, 64.79 right now. You then have a falling price oscillator below 0. What does that tell us? That tells me that price goes down and tests the lows from late last night out here. When I say last night, the time period was 23:30. So at 11:30, when price got down into the 62.60 level. So that's what you should be looking for. Now, How will you know if there's a bottom? Look, if there's a bottom, what you're going to see is this price oscillator get above zero. You're going to see retracements come back and not take out prior lows. The most specific prior low that you're looking at, in essence, is the C point of that A to B equals CD. That's at 63.57. That's what you're looking for inside of the NQ. If we go take a look at the ES Mini, the short-term chart out here, so let's put this up on our screen. Let me see if I can figure out how to go ahead and post that in. And we got a break 1 minute. I can't hear him. We're still on? What's the deal here? I don't have a high sign. No, 13:26. No, I see we've got about a minute. So as we navigate, here is the potential A to B equals CD pattern inside of the ES. And that could get us up into the 26.68 level, 27.19 out there. In price out there, also getting close to zero. Steve with the TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Taking a look at the, taking a look at those 30-minute charts, both for the ES and the NQ. What things it is that you should be anticipating if you're doing this at the home, especially for subscribers that are following along, have the same set of tools or most of these tools out there that they can use on their stock charts, because everybody most certainly would like to go ahead and be able to buy a bottom. And bottoms are going to start on a shorter-term time frame chart. This is the chart of the NQ right now. And depending on where it might close today, the candle, because we've seen such a wild swing from earlier this morning, or late last night, my time, I should say, morning your time, I'm looking at some whales right off of my deck, doing the show right from my balcony, basically. And I see some whales breaching in the distance. There we go. That's the reason that I come here right now. I'm in Maui. I'm actually in Kaanapali, and I specifically stay at the Westin Resort. I've been coming here for a quarter of a century, and the reason I stay at this hotel, Maui's not really a great. I might say the Westin's not. It's an okay hotel. It's not a great hotel, but I posted a picture in the den from my balcony. I'm on the top floor out there, and you can see how close I am to the beach. So it is in essence the hotel on Kaanapali where you are closest. You are basically right smack dab on the beach. So you just can simply sit on the deck and read and basically look at whales in their playground. And if you've never been out to the Hawaiian Islands, this is also a great area to kind of camp out, because across from me is Lanai, small private island, my favorite place in the entire universe, and I'll be spending some time there. And then off to the right, and there's about 3,000 people that actually live there. That's the island that was purchased by Larry Ellison, I don't know, maybe 6, 7, 8, 9 years ago from the guy who owns Castle and Cook, Murdoch, what's his name? Not Rupert Murdoch, the other Murdoch out there. But in any event, and then off to the other island, so is Molokai, even less populated. And so this is the habitat where a lot of births will take place. The whales aren't eating. So humans and basically everything else around, for the most part, they've already eaten by the time that they get here. This is just simply their winter weather. It's spring break for the whales. And anyway, back to the NQ chart. I don't recall if I posted it, so I'm going to go ahead and post it right now, just to simply make certain of it. And oh, by the way, the waves here on Saturday. I didn't arrive, but the waves here on Saturday over at the area on the North Shore here, a place they call Jaws, as well as in the Bonsai Pipeline, were 25-foot waves. A big storm was going through here last night, and maybe even around for the next day or so. But hey, how about that? Now the waves have come down. They're probably like about 5 feet or so. I'm not on the North Shore. That's on the other side. In any event, watch the NQ. There's a possibility that the NQ could actually form a hammer candle today. That's really what it was that I was trying to express to you. If it closes up towards the 6,600 area, then you'd have a hammer candle. Then you would have your first signal of a potential bottom. See, the key here for any market, anything that it is that we trade, is really being able to find a reversal signal. That's the purpose of these bullish and bearish signals out here. If you go back and look at that chart on the NQ that I posted, you can go a little bit further to the left on the chart. If I were in live video, I'd be showing it to you. So in this case here, I just kind of have to have you pull up the chart. And if you go back further to the left where you see a bullish engulfing candle, it is actually on the trading session of January, what is this? Looks like January 2nd. And see how on January 6th, so here's what we know. Prices come down into a previous swing point area, but also a previous bullish signal that is held as support. Now, if support breaks, then support becomes resistance. But see, that in essence is the sign of a potential sign of a bottom out here. Do we have it right now as of 1:34 in the afternoon? Absolutely, positively not. We don't. And on a daily chart, you're going to be looking at the signal for the end of the day out there. But take a look at the ES Mini on a monthly chart, and I'll try and switch over to take a look at, I see. So the way I do this here, this kind of, I've got to do something manual here. No wonder I couldn't access a few things. So let me go ahead. I'm going to post just the ES Mini. Now, this is going to be the continuous contract that we post out here. And what you're going to see is there another potential sign of a bottom out here? In other words, if price were really going to fall apart, where would it fall back to? And you're going to a longer-term chart here. And right now, this happens to be the monthly chart. Look, we just started the month. But if you were to look for a line of demarcation, it's Stevie's red line. We're trading at 26.40 right now. The Stevie's red line is like 26.41. So prices come down to support, and it's held that level. That's why you put that together with taking a look at the daily chart, taking a look at what's going on the intraday basis, and that is how you answer. It's how I would answer. It's the only way I can answer the question, has the market formed a bottom out here? Because if those things don't happen, if these areas fail, then the answer is no, it hasn't found any type of a bottom. I'll put the S&P 5 because this is the ES Mini. But let me just go ahead and I'll post the monthly chart for the S&P 500. Just let's give this thing a second to populate. And that way you're going to be able to have that. So because this is posted in the den, you guys can download it, you can print it. But what you're going to see here is we are trading right on that number, 26.45. So price here, again, has come down to support. If price closes below that, it's just telling you that there are some real big problems in River City. Speaking of River City, though, let's go take a look at the NDX 100. Now, I don't know about you, but that didn't even make sense to me, what I just said. But what does make sense is taking a look at where the NDX 100 traded down to. So yesterday, and it's pushed, yesterday during the day, pushed right down into what? Into Stevie's red line. You don't even have a bearish reversal candle on a monthly basis for the NDX 100. By the way, Stevie's red line is 64.19. Did I post that? I think I did. If I didn't, I'm going to do it right now. And this multitasking and trying to remember when you post something and when you don't, that's a hassle. But now it's posted. So now we know. So with regard to the NDX 100, 64.19 is the number. Now, the NDX 100 might be an area that a playground that you would want to consider if, in fact, this has been a bottom out there. That's why you pay attention to the NQ. Another area to look at, this will be a freebie, is but we already talked about the NDX, so it's not that much of a freebie, is to go take a look at the XLK. Now, in the case of the XLK, 63.27 is the number, Stevie's red line on a monthly basis, as long as price remains above that for the month, meaning not till February 28th. And poor David White, or actually how lucky can you be to be David White, right? Here's a guy that simply does not age. He does not even get a birthday party this year, right? He gets born on February 29th. Well, then you know you're a special person, right? He's your favorite polar bear. He's my favorite polar bear. But then you take a look at the benefits. I don't know about you. I would like to hang out here for a long time. He gets to cut out basically. He only grows older one of every 4 years compared to you and I. I mean, that's a pretty cool thing out here. Really cool for the XLK, 63.26 out here. So if you're looking to go long, look at the technology. Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Tom writes in and says he's been trading the TVIX for the past 3 days, and he's been in and out during the day today. He doesn't have a position right now. Wondering what my thoughts are on it. And so this is what I can share with you right now, Tom, and I apologize because I've got some limited data out here. Let me go ahead and post this first chart. You're probably aware of this, but just something for you to go ahead and consider. Let me make sure that actually posted. Did that post out there? Yeah, it looks like it did. Okay. And, Tom, the chart that I just posted here, first it's got the trend gauge. Now, I didn't get a chance to listen to any shows, but Basil probably covered this, but I don't know for sure. You're going to see that yesterday's trend reading, well above 2. Where was it at? About 3.5 or something like that. And when you close above 2, which it did yesterday, first of all, it's an indication of an S&P. Typically, what's associated with that are bottoms inside the S&P 500. So the top portion of the chart that I just posted is the S&P 500. You'll see a red line on the bottom portion, which is labeled at the 2.0 level. We don't need to get into the calculations of the trend gauge out there. But what you will see is that sometimes it's just a short-term bottom. In other words, for days. But we still are in an uptrend, okay? This market is still in an uptrend. You and I just looked at monthly charts and saw price coming down to Stevie's red line, in essence holding that. At a minimum, you have to see a price oscillator turn down and a long-term price oscillator turn down in order for the trend to possibly even have some type of erosion to it, and just would mean that you could see price continue to further pull back. So don't forget, remember, we talked about the 1929 market, between 1927 and 1929. And that move up, that was more than a doubling in price. In fact, it was a 350% move up there. And what we saw were 7 or 8, I don't recall the exact number, really nice retracements. They averaged 10%, a little over 10%. 10% for us inside the Dow was 2,600 points out there, right? So, again, vertical markets. Here's what you and I really know, Tom. I know this is kind of getting off the topic here, but not intended to. But one way of really answering your question, we know right now for sure, based on January and February's market action, that we are in a real vertical market. We are going to see wild swings both ways. This is not the last one we're going to see to the downside. It's not going to be the last time we see things move to the upside. So if the S&P 500, based upon this trend reading, is trying to form a bottom, not saying it's today, I'm saying just be careful and put that into your coffers with regard to which of those volatility vehicles you want to trade. The other thing, and there's no question about it, you've got the spot VIX index, the cash VIX index, trading at 36.58 out here. I've got to update these charts, so give me a second here just to try to do that. And for example, you've got the February contract trading at 25.80. The normal positioning of the spot VIX versus its futures contracts, the spot trades below. Even if I go out to, let's see here, if I can go out to September in 2018, will take me out that far. September in 2018, the spot volatility, that's the spot, the futures contract for September is traded at 18.28. That type of event, okay, is going to get resolved. And it's not going to get resolved because it could have been resolved. It's not going to get resolved with the September futures contract starting to trade above the spot VIX. That's just simply not going to go. So what you should expect and anticipate, and so kind of put that together, Tom, with maybe the shorter-term ES mini chart, see if it's starting to make A to B equals CD patterns to the upside. Until that happens, then, all bets are off with regard to the VIX and where it could go. It's just that this thing is going to have a massive and wild ride as it gets back into shape out here, as it gets back into line, right? It just needs to get back into line. So just be careful with regard to those vehicles. I know you know how to trade them well, and best of luck to you. I know you also talked about trying to get into the GDXJ and so forth. And the best thing that I can provide you with there was really, maybe you didn't hear the conversation about gold priced in euros. You've really got to see gold priced in euros turn up, and it's not. Right now it's actually taking out the low from February the 2nd out there. And until that point in time, you're going to see more pricing pressure inside of these mining equities. There's just no two ifs, ands, or buts out there. So, of course, there are more than two buts out there, but that's my take. My take is wait until we start to see both gold priced in dollars and gold priced in euros starting to move in the same direction. Right now, that same direction is to the downside. That is not a good thing when it comes to any of those mining equities out there. So I say look someplace else. I know you're also interested in natural gas out here. Natural gas is, what is the contract? Is it the, are we looking at the, I think we're looking at the March contract out here for natural gas. I don't have any levels of support right now that I can provide you. This thing is pulling back. It looks to me like this wants to pull back into the swing point from December 21st. This did break out. So if this is going to make a move to the upside, it should take place today, tomorrow, something like that. Because what I'm looking at, what you should be looking at, well, let me post it because you're not looking at anything. So that it's got to remind myself, post the charts, Steve-O. And Danny, I wish I could post Bitcoin, but I can't. It's just problems with the system, and I'll do the best I can for it tomorrow. But the chart that I just posted, the date you're looking at is December 28th, a wide-ranging bar. So we don't need volume necessarily. We can just simply look at wide-ranging bars to understand where the buyers were at. So on December 28th, at the same price level, in essence, where we're trading at right now, or very near to it, 270 is the exact number. That's where you saw a breakout. We even saw retracement back on January 5th where price pulled back in. So got down to 269, rejected that level. Now we're back into that area. So Tom's real question is, hey, is now the time to take that trade? It may be out there. But what you'd have to really do, I'd say you'd have to go down to a shorter-term time frame chart. You are a shorter-term type trader out here. So let's just put up a 10-minute chart out here. And on a 10-minute chart, as long as you're seeing, oh, geez, I need to turn those off. Oh, wait, I've got to post that too. Sorry about that. I keep thinking as soon as I switch over to a different time frame, voila, it's just going to magically post on your screen. Boy, nothing could be further from the truth. So let me go ahead and post this out here. Here we go. In just a moment. Just seeing HotCom. No kidding. Did this chart post? Here's the post for natural gas. Did that chart post out there, folks? I sure hope that it did. No chart. I posted it. I hope it's there. Okay, good. All right. So here's the 10-minute chart here for natural gas. And as long as this continues this stair-step approach to the upside, then from a short-term standpoint, knowing that it came back into a level of support, you could go ahead and trade this. And then what you're watching for is what happens around the 278 area, back to, in essence, where price started to move lower out here. If you're looking at it from a longer-term standpoint, it's really going to be the first A to B equals C to the downside. Perhaps that's what it's trying to form. Right now, that would take us to a price level of about 273, 270. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Folks, Dow right now is up 41 points. S&P is down 11. NASDAQ 100 up 20. Russell's up 4. Semiconductors are up about 14 points. So here's what we know as of about 1:54 p.m. East Coast time, 8:54 in the morning here in Maui. What we know is that the market is trying to form a bottom, but no bottom pattern out there. Signals, indicators, tools that show us that the market should form a bottom, well, those tools have been our indicators have been present for days now, and they haven't actually worked, have they? Doesn't mean you ignore them, because, you know, as price was moving higher with less, as price was moving higher in the face of a declining tops up pattern, I'll just simply post the NASDAQ composite out here, and let me just put a couple of lines in his chart, see if I can do that for us. That's not going to work. Let's see here, a red trend line. So what I'm just going to draw, what you're going to see on the bottom of the screen out here, as soon as I'm able to post it, I'm going to post it here just momentarily. This is going to be the NASDAQ composite out here. There we go. And what you're going to see is the bottom panel is its advanced decline oscillator reading. And it was making the lower highs in the face of price making higher highs. And we knew that at some point in time that was going to lead to some type of pullback. Certainly does never broadcast for us which type of pullback. Well, we know what kind of pullback we got now. All right. So this is a tool indicator that suggested that there was a short-term top that was forming. Well, it's been a real short-term top, one with a lot of price erosion and devastation. With regard to the advanced decline oscillator, there's no signal as we speak right now that tells us anything else. But the other indicators will eventually kick in here. Spot VIX index and its futures contract, that trend index reading, the oversold condition inside of the New York Stock Exchange, which right now is down to the minus 333 and its advanced decline oscillator reading. All those lead to some type of healthy move. So, folks, thanks. I hope the whales out there are going to put up with me as well. So it's off to the water. Have a great Tuesday. I'll see you as best I can on wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.